Hi and welcome to the weekly market update. It's Tuesday the 5th of November 2013. Okay, so last week we saw the conclusion of the Fed meeting and the release of the statement from that. They didn't alter too much, but we have seen people's expectations of the message that they're giving slightly change. So people sort of taking the view, or a few banks taking the view, that the Fed could maybe begin to taper sort of at the end of this year, or sort of bringing their expectations a bit more forward after putting them off. So that's sort of what we saw last week, but we did see some volatility coming back into the market towards the end of the week and at the start of this week. In terms of data that we've seen for this week, yesterday we saw PMI manufacturing numbers out of the Eurozone, sort of a bit of a mixed bag, some coming in a little better, some a little worse, but largely we saw the German slight improvement, and then for the Eurozone we saw that number on hold. For the UK yesterday we saw PMI construction number, that actually coming and beating estimates, another good number for the UK, so 57.4 there. Also yesterday we saw from the US, it was factory orders, a slight improvement there as well from the US. In terms of data that we saw today from the UK, it was the PMI services number, again another really decent number coming in at 62.5, so a large beat again there following the PMI construction number yesterday, so again a lot of positivity for the UK data. Otherwise we saw Eurozone PPI numbers this morning, again this coming in slightly improving on the expectations, or slightly lower on expectations, sorry. So where that sort of leaves us trading today, we've got the FTSE around 67.20 mark, the Dow around 50.527. For currency, seen some strength in the euro recently, and this causing some concerns in the Eurozone. Last week we saw a really weak inflation number for the Eurozone, coming in much lower than expected, and this alongside this strong euro is making it very difficult for particularly the peripheral nations to try and come out at the other side of this crisis and try and actually show some improvements in their economy. So people saying it's been very restrictive, and actually a lot of people now calling for the ECB to act. Quite a few banks putting out that they're expecting action from the ECB quite soon, but we'll talk about that a little bit later. So the euro trading around 1 spot 35.04 this morning, cable around 1 spot 60.50. Obviously seen some strength after the decent number that we saw this morning, so a strong day for cable so far. The gold futures trading around 13.12 spot 20, and then in terms of crude, actually seen quite a lot of weakness, been on quite a downtrend recently, currently trading around 94 spot 58. For the rest of the day, not too much out. We've just got US ISM non-manufacturing composite number, that expected around 54 from 54.4, so a slight reduction. Okay, so in terms of data the rest of the week, it's going to be quite busy. Tomorrow we get the Eurozone PMI services numbers. Again, largely expecting those to stay the same as the last readings, not too much difference expected there. Also get Eurozone retail sales, expecting those to come in down 0.4% month over month, but up 0.6% year over year. And then we get German factory orders as well, 0.5% month over month expected, and 5.6% year over year. From the UK tomorrow, it's industrial production and manufacturing production. Expecting improvements in both of those readings, coming into positive territory from negative last, so again better data from the UK. Also in the afternoon we get the NIESR GDP estimate for the UK. It's for the 3 months up to November. The last reading was 0.8. So interesting to watch out what we see there. We also saw this morning the NIESR boosting their growth expectations for the UK, this largely as a result of the increasing house prices that we've seen. But it's not all positivity from them, then saying that there will also be, and we'll see a lag on wages, and also concerns over the house prices and the so-called housing bubble appearing. So it's not all positive, but growth expectations have been forecast to pick up. And tomorrow afternoon from the US we get mortgage applications, and then we get the leading index, that expected at 0.6 from 0.7 last. Then into Thursday in the morning we've got German industrial production numbers, that expected at flat from 1.4%, and then year over year 0.1 from flat. Then the big data of the day, it's going to be the central bank meetings. We've got the Bank of England meeting, the announcement of the rate decision and asset purchases around midday. Not expecting too much change from the Bank of England, so nothing too much to watch out for. What people will be watching for is the ECB decision, and also the press conference from Draghi following that. Like I mentioned earlier, we've seen this strength in the euro. We've also seen a much lower inflation reading than expected, and people really concerned about what what this could be doing to the Eurozone, particularly the peripheral nations. It's caused a lot of banks to revise expectations on what they see from the ECB in terms of rates. A lot of banks now calling for a December cut in the refinancing rate, and even some banks calling for a cut this Thursday. Whether we see that is, it's quite a mixed picture, but a lot of people calling for December, not so many for Thursday, but it will be really interesting to watch out to see if we do get this cut in the refi rate, or how the markets react, whether we do or if we don't, see if people are starting to factor in these expectations. Again, people largely watching what Draghi will have to say afterwards, and the questions that we'll see follow it, probably a lot around the rate cuts, a lot around the euro, and a lot around the inflation data that we've seen in Europe, and how much of a concern this is to the central bank, and whether they are willing to take action. So looking for clues what might be to come at December's meeting. Otherwise, from the US in the afternoon on Thursday, we've got the GDP figure for Q3, and that's the annualised reading, expecting that in at 2, and the last reading was 2.5. And then we get the usual initial jobless and continuing claims. Initial jobless expected at 335 from 340, and the continuing claims expected to stay on hold. We also get personal consumption data, and the PCE core is expected at 1.5 from 0.6, so an improvement there. Okay, and finally into Friday. Start off from Europe, we've got German trade balance, expecting a better picture there for them. We also get French industrial production and manufacturing production, expecting improvements in those data as well. From the UK, it's trade balance data, expecting a slight improvement, and also construction output data. Obviously, we saw the strong construction number yesterday for the UK, but this is the construction output reading, expecting that at 1.5 month over month from a down 0.1% last, and then 8.2%, so a big reading year over year for UK construction output. Following that, though, the big number of the day is going to be this US non-farm reading. Obviously, we do usually expect it on the first Friday, but because of the government shutdown, we had a delay in the readings. So we're getting it this Friday. It's actually expected in at 125,000, so a much lower expectation than readings that we have been seeing recently. The last reading was 148, so as I said, expecting 125, but could see quite a bit of reaction on the back of this number. In terms of the unemployment rate that we'll see come out, consensus on Bloomberg is actually for the rate to tick up to 7.3 from 7.2, so it's all dependent on, again, the non-farm private payrolls number. Also, the participation rate will be largely watched out for to see sort of the health of the unemployment picture. Average earnings, personal income and personal spending will come alongside those readings, and all expected to tick up slightly. And then to finish off the day on Friday, we get University of Michigan confidence, expecting that at 74.5 from 73.2, so an improvement there when we have been seeing a slight downtick in that reading. Okay, so the things to watch out for obviously going to be Thursday. It's the meetings, the central bank meetings. People really going to be watching out for Draghi and what he's got to say, especially with all this chatter of a rate cut now, and possible hints of a further LTRO. People are going to be watching out for. And then Friday we're going to get that non-farm number. Okay, that's it for this week. As usual, any feedback, much appreciated. Thanks.